Hello and welcome everyone to the week ahead commodity report for the 26th to the 30th of November 2018, presented by myself, Phil Carr, at the Gold and Silver Club, and we will of course be reviewing gold and oil prices for the week ahead. Gold prices on Friday, they slipped as investors shifted over to the safety of the dollar over worries about a slowdown in the global economy, exacerbated by a sharp decline in oil prices, with oil slumping over 8% to the lowest level in more than a year, posting the 7th consecutive week of losses for oil prices amid intensifying fears of a supply glut. That not only affected oil prices, it also affected equities and of course the commodity currencies as well, such as the Australian dollar and the New Zealand dollar, which eased on Friday, on track for their worst weekly performance since October, offering some really great opportunities to actually short those markets. So with that, we'll move over to the charts and we'll talk you through the key levels that we're looking at next. First of all, moving over to gold, which closed on Friday at $1,222 per ounce. As we mentioned in the midweek report, we're moving into a seasonal time of year where often gold does tend to pull back as we go into December, particularly as we get closer to the FOMC statement on Wednesday the 19th of December. So we started to see a rollover in price on Friday. This will really get confirmation if we were to break below the weekly lows going into next week. So we've been within a very tight range over the last week here. So gold's been moving just over a 100-point range or a $10 range here. Gold tried to break out above $1,230 last week. It was unsuccessful in doing so, and it is a little bit vulnerable now to potentially rolling over if we were to break back below the weekly lows here, taking the price back to approximately $1,213 if we do break below the weekly lows. If we were to get further follow through than that, I would look for a move then back towards 1,208 and then possibly 1,200. That's if we roll over and break below support going into next week. On the flip side of that, if gold is able to get some additional momentum here going into next week, if it's able to break back above $1,228, I'm targeting then $1,233 on the buy side. But it does look a bit vulnerable here going into next week, and certainly the narrative has now shifted now to dollar strength. So the dollar last week was breaking down to 2-week lows, but it's had a full-on recovery over the last few days, and it now looks like the dollar wants to break out and retest the 16-month highs, which could certainly put pressure on gold, on silver, and also the commodity currencies as well, which look like they could break down too going into next week. Now, moving over to crude oil, we've seen now over a 30% decline over the last 6 weeks here. In fact, on Friday, we saw another 7 to 8% move to the downside here. So we've seen another round of selling and essentially another bear flag. So we mentioned this again on the midweek report where oil prices were vulnerable. If we broke back below Thursday's lows here, we could start to see a revisit back towards the swing lows and possibly look to target $51 to $50 per barrel. Well, in fact, on Friday, we found support at exactly $51 per barrel. That is where oil has closed out the week. $50 will be a very key psychological area of support. We're also now getting very close to the OPEC meeting, which is on Monday, the 3rd of December, and the anticipation is that OPEC may look to cut supply, and with that we might see a bounce higher on oil prices. But certainly next week oil is still under some pressure here, but it has been quite a significant sell-off, and we're right back at the lower end of the recent trend channel. So what we've seen of late is any rallies that's currently getting sold into, so retracements are definitely being perceived as selling opportunities, and for the time being that's the way to capitalize on this move now with oil. So retracements are essentially getting sold into, so you want to be careful trying to pick a bottom with oil at the moment, because most traders are just selling into these rallies. In fact, you can benefit from that by, when we do get these retracements, look for those sell short opportunities, especially for example on the 4-hour charts here where we just continue to get bear flag, multiple bear flags here, where you can just look to take advantage of a breakdown of those bear flags and look just for this staircase pattern of where we just continue to see retracements get sold into. And that's really been the way to play this move over the last month with oil here, where we continue to see any retracements get sold into. At some point, no doubt, we will get some sort of capitulation and a retracement here, but I don't think we'll probably see a meaningful move like that until we get closer to the OPEC meeting, which is going to be on Monday, the 3rd of December. That's definitely a trade opportunity you want to have on your radar. We could really see a very big move here on oil over the course of that week, not only on Monday, the 3rd of December, but also during that whole week. In fact, if we zoom out a bit on the chart here and we have a look at this on the weekly chart as well, you'll note where if you take the swing low going back to 2016 and a swing high that we've achieved in 2018, and 18, we've revisited the 50% retracement zone now. So we've essentially, oil prices have now given back 50% of that increase in price in just over 6 weeks. If we were to roll over and see another breakdown in price below $50 per barrel, I would then be targeting approximately $47 per barrel, would really be the next key support here if we were to see a rollover of price. On the flip side of that, if we do start to break out and retrace, I'd need to see a meaningful break and a close here back above approximately $56 per barrel. That would then start to signify that the low could be in, and that's where we could really start to see a bit of a recovery here for oil prices. But of course, the OPEC meeting and whether they will cut supply will very likely determine the next big move here for oil prices. Finally, I'll just touch upon one of the commodity currencies here as well, which does look vulnerable as we go into next week, and that's the New Zealand dollar, US dollar. So the commodity currencies are of course impacted by gold and oil prices, and with gold starting to roll over and the big decline we've seen here in oil prices as well, the New Zealand dollar US dollar is looking a bit vulnerable here as we go into next week. We do have a sell signal on the New Zealand dollar US dollar. If it breaks below the weekly lows here, if we break below the weekly pivot, we could start to accelerate, taking the price back towards a monthly pivot and possibly really start to see a change in trend here. It's got a bit more work to do to break down, but I would have that on the radar. It's really similar here as well with the Australian dollar US dollar going into next week as well. We also have a sell signal if we were to see a breakdown from some of this underlying support going into next week, especially if gold starts to weaken next week as well. We could see also opportunities to sell into New Zealand dollar US dollar and also the Australian dollar US dollar as well. Now, if you'd like to join us at the Gold and Silver Club and become part of a community of successful traders, there is an opportunity for you to do so. As a member, you get access to live trade alerts. Those are delivered via WhatsApp, email and SMS. You have access to mentorship, expert advice, in-depth market analysis and trusted insights so that you can know earlier how to act quicker and maximize your return on every trade opportunity. For more information on the service, please go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And make sure you subscribe to our YouTube channel. That way you're kept updated with the latest commodity reports.